The topic is very hot. It's constantly discussed in our office. So let's start directly with. I would ask everybody from the panel just to present themselves briefly and their fund and what is the stage they're investing at now. So let's start with Myrto.
Sure. Thank you, Daniel. Thank you for the invitation as well. It's a pleasure to be here. So I'm Myrto Papathanou. I am a partner at Metavallon VC. We're based in Athens, Greece, and we are an early stage venture capital. So we invest predominantly in B2b businesses on a sector agnostic basis. And we're looking at providing the first ticket. So we're typically the first institutional investor in companies. We have a focus on Greece and the area. So you know, we look at Greek founders and a lot of diaspora. And we've completed so far on the fintech side two investments on that stage, and I'll talk a little bit more about that later if you want. And we're also seeing an increased flow the last 6 months, I would say. We're about halfway through our investment period, so we're still constructing our portfolio. And personally, I started my career in finance. So I spent 5 years in London working for investment banks. And then I switched to technology on the industry side, spent about 10 years there on the operations and finance role. And then I started Metavallon VC. So it's kind of a combination of finance and tech from my side.
Fantastic. Thank you very much. Next, Max, could you present briefly yourself and your fund?
Of course. Let me first thank you for the organization of the call. Amazing that we can these times exchange ideas and have some input from different angles. I'm MD at the Corporate Venture Capital Fund of Raiffeisen Bank International. Our fund is called Elevator Ventures. We are investing in fintech, in exceptional fintechs from Central and Eastern Europe, the so to say the home region of Raiffeisen Bank International. We are providing money on the one hand, but of course also access to the assets, the geographical reach, the network of RBI Group. We're looking for companies that have achieved already some traction on their home market, are looking for their Series A investment rounds typically, and do want to internationalize, to maybe partner up for the first time with a large bank like RBI Group, and on the other hand need the money for further internationalization. Here we can be a very strong growth partner. We've started investing last year. We've done 5 investments so far. We've just this week signed one, and yeah, looking for more disruptive ideas from our core region, from Central and Eastern Europe.
Perfect. Thank you very much. Mehmet, please. Do you hear us?
Yeah. Okay. Sorry, I couldn't unmute myself.
Yeah.
Hello, everyone. This is Mehmet. I'm with Earlybird Venture Capital. So we're managing Earlybird's Digital East fund. So we invest in early stage and selectively seed throughout all Eastern Europe. So Eastern Europe for us is starting from Baltics up to Greece, including Turkey and anything east of Germany. We are investors in ambitious founders coming out of this region. So it doesn't have to be stay in this region. I believe like all of our fellow investors are interested in global businesses as well. So we were lucky to be investors in a couple of billion-dollar startups that emerged from the region. So namely Trendyol, Peak, and lastly UiPath. So probably the most well-known company in our portfolio. So we were the earliest institutional investors, actually the earliest only investors in all of those companies. We also do Fintech Investments. So much recently, we have done Payhawk from Sofia and Fintech Is from Romania. And from our wider Earlybird portfolio, we also have N26, which is a major neobank from Germany, from our sister fund. But in general, we don't have a sector focus. So at our core, we are like mostly software investors, but we especially interested in fintech, automation, infrastructure software, and SaaS businesses in general.
Great, thank you very much. And last but not least, Perry, could you present yourself briefly?
Yeah, hi, thanks for having me. It's nice to be here. So yeah, I'm a partner at Augmentum Fintech. So I've been involved in fintech a long time. I advised, invested, and built fintechs for the last 20, 25 years. I built the first what's called a robo-advisor some 20 odd years ago in the US. And I have a big passion for Central and Eastern Europe. So I work with some great entrepreneurs there on the board of TransferGo in Lithuania, and advise Moniz in Estonia, and do some work with Payhawk and some with Cashwave in Bulgaria. And so, yeah, some sort of very keen and passionate on the region. Augmentum, that I'm a partner in, is the largest listed fintech fund in Europe. We raised about 150 million pounds on the London Stock Exchange about 18 months ago. And being a listed fund means that it's a bit different from a traditional VC. It's what's called a permanent capital vehicle, which means you can be much more patient, and we can do early stage and late stage. We can do secondaries and primaries. We can do debt and equity. We can kind of do anything we like, is somewhat in our control. This is a listed fund. And we have a portfolio of, I think, 25 odd big name European fintechs from pretty much Series A through C. So we led the last rounds in Onfido, that you may know, and Moniz and Receipt Bank, and all sorts of kind of other fintechs generally across Europe.
Great, very, very exciting. Thank you very much. So I suggest that we start first with a little bit of the bigger picture. So from, I mean, it's very interesting that we have people coming from different angles. And I would like you to share with us your insights, especially through the eyes of your portfolio companies and through your observations for the last 6-8 months. How do you see the fintech scene evolving? I mean, in the sense of whether it's becoming more dynamic, more favorable to founders, or there are trends that actually are more challenging for founders. I mean, what are the insights? Something that you have, something new for you, something that surprised you over the last 6 months? Maybe to start with you, Perry, because I mean, you have a very interesting look at the whole industry and geographic focus as well.
Yeah, the last 6 months. So, you know, some of it's incremental and some of it's been sort of somewhat driven by COVID. So, yeah, you know, as you will have seen, COVID has obviously had a couple of interesting impacts. I mean, there's been a bifurcation in fintech, as there have in most all the tech sectors that Earlybird and others invest in, where, you know, some sectors are thriving, so savings and investments, and some of these sectors are, you know, people sitting at home not doing very much, looking to look after their finances, whereas other areas like credit or, you know, SMEs have been suffering. So there's a bit of a bifurcation, with some businesses doing well and some struggling somewhat in this period. We've seen sort of, probably, I would have said the biggest thing, but that's been happening, at least from where we are, has been a lot of this well, two things as well, from the sort of acceleration of digitization generally from COVID. One is there's been a big move towards kind of embedded finance generally, so putting financial services into existing user flows, not just sort of consumer fintech wise, but SME platforms are trying to sort of capture greater share of kind of engagement from their customers and more revenue from their customers. So, and things like open banking and APIs and all that sort of thing has been kind of facilitating quite a shift to kind of embedded and infrastructure-led fintech, where there was quite a lot of focus on consumer fintech. I think the other thing I would be interested to, you know, your participant talking from a bank. I think the banks increasingly, with this sort of accelerated digitization in the world generally, we've seen something of a sort of engagement from the institutions, and there's sort of probably going to be growing consolidation as some of these areas get more mature, and sort of seems to be more partnership and sort of direct interaction happening with the institutions. And so, albeit sort of sales cycles into corporates have slowed in this period, quite a lot of the financial institutions seem to be keen to get engaged and are sort of trying to build a base. So yeah, some of it's just accelerated things that were happening before, but there are some sectors that, you know, whether it's debt rather than credit, or whether it's digital payments rather than, you know, point of sale payments, that have been thriving, obviously, with remote living.
And Perry, do you think that this acceleration will actually continue in spite of the fact that people are getting more used to the post-COVID situation, or there'll be kind of the acceleration, people trying to get a little bit back to normal, or it's a irreversible trend in a way?
I mean, I could let the other, I mean, what you tend to find is, you know, it's quite case specific. So it's somewhat hard to generalize, I guess, is the short answer to your question. So, you know, there's definitely the sort of embedding in sort of software and other services. A lot of, as you've seen, a lot of businesses are trying to increase ARPU and get higher engagement and more money out of their customers at the moment. And so sort of that trend towards sort of broadening, even the big tech companies, the Ubers and the Amazons, and sort of everyone's going there, I think that's pretty likely to continue. Some of what may slow slightly is, you know, we've been in a pretty low interest rate environment, as you'll know, and people are sitting at home and sports markets are closed, and so, you know, have time on their hands. And so sort of millennials taking disproportionate risk with assets, and, you know, potentially, I mean, I chair a business in the UK called Free Trade, which is sort of the Robin Hood of the UK. They've seen, you know, a doubling in assets in 3 months, but I'm not sure that's quite going to sustain. But they were already coming off a base where they were growing at, you know, 200-300% a year anyway. So it'll sort of continue, but not quite at the same rate, I guess, is the short answer. But equally, what's happening, and it's happening in lots of sectors, is businesses that didn't have great unit economics, and maybe weren't great businesses in the first place, as you've seen, a sort of, you know, accelerating downfall of people who maybe, you know, slightly had no clothes and were struggling to prove their business models before. That's also accelerating because, you know, to some extent, the other pressure is increasingly on revenue unit economics, because cash is king in this period and will continue to be. And so, you know, companies that maybe were going to struggle at some point, that's also accelerating.
Right, thanks. And Max, from your perspective, because you're a very peculiar organization, you're a CVC, and there are not many of these type of VCs in Central Eastern Europe. How do you see the environment for fintechs through the eyes of the bank and the collaboration with the institutions?
Yeah, I mean, can you hear me?
Yeah.
Highly interesting times, of course, and a lot has been said now by Perry. A lot of things that I can echo. I think the major trend from a bank's perspective is the trend around opening up the banking, be it now from PSD2 regulatory wise, but be it also through offering standard APIs to the world, and see who is actually capable of building interesting business models on it. I see there a lot of interest from inside the bank in actually partnering up. Digital is not anymore a nice to have, but digital first is everything. I mean, the last few months, the digital channels have been the only ones where you are able to reach your customers and also to onboard new customers. So any banking institution that has not been able to actually deliver here ways and the modes how to service customers fully digitally. Of course, had problems, and here a lot of fintechs over the last few years have shown the way how to do it. From coming more close to RBI itself, I mean, I think that we see a lot of change in mindset in fintechs already for quite some years, but I think it will accelerate from the point of, do we need to actually spend tons and tons of money for creating an own multinational brand, or are there ways of reaching the consumers through existing platforms, be that now other platforms or be it banks, existing brands, B2B2C models that actually work quite well from what we see. And here, fintechs, of course, see and find the challenge of actually raising the awareness inside of banks for their solutions, for their systems, proving what they can do, also learning from large organizations, co-development, etc. And here I think those banks that can actually be attractive as partners and also as such platforms for fintech innovation will actually be able in the future to continuously create on-the-edge innovation. And that's also why RBI very deliberately took this path of inviting with the elevator lab the best fintechs out of Central and Eastern Europe to pilot with us, and to have a clear process of how we can develop things together on the one hand, and on the other hand also to invest and to through Elevator Ventures also be here an investment partner, because this, of course, strategic partnerships need a long-term angle. There needs long-term commitment and it needs cash, running a pilot project with us is sort of say the best due diligence that you can have, being on the platform of a multinational bank reaching 16 million customers potentially on the spot can provide huge value for fintechs that are ready for it.
Right. Thank you very much. I mean, I do share that engaging with banks based on our experience in the Business Innovation Program is one of the best ways to actually get to VCs and a bigger network of clients. I have a question to Myrto and Mehmet. It seems that there's some acceleration of the positive trends in the fintech industry. I mean, does this mean that actually there is a bigger weight of fintechs, a bigger weight on your attention span or on your pipeline? Do you kind of shifted focus more on fintechs? What is the trend in your pipeline that you see in the last 6-8 months based on these trends? Probably to start with Myrto.
Sure. So if I could identify a couple of things, is that kind of on our strategy, the B2C side is up. So we don't look at consumers at all, just in terms of kind of like effective use of capital and coming from the region, etc. So in terms of like the B2b Fintechs, and Perry touched upon it, talking about embedded fintech and what you do there, we see, I would say, the same amount, maybe a bit lower kind of a number of startups in our pipeline. I mean, what we did internally is that we have, as I said before, excluded some sectors, so the B2C doesn't come in our pipeline. And then the second thing that we're trying to do is try to understand what the regulatory framework is, and also it was mentioned the cooperation with banks in terms of pilots. So this obviously significantly increases a kind of the whole cycle of selling and scaling. So this is something we very early in the process try to identify and see how it will affect the potential startups. So I don't think we've been slower in our response. I do think that we had less than, like the last 6 months, I would say we had less deal flow coming in from the fintech side. But again, we've tried to establish early on criteria that will kind of filter out very early things that maybe are not for us. So I think like overall, we kind of assess and respond to the rest with the same frequency despite the times.
Yeah, right. Thank you. And Mehmet, you have recently you've done these 2 investments in Fintech Is and Payhawk. So both from the region. Does this mean that you see both companies are very promising, and does this mean that you see more opportunities from fintech coming out of the region? What is your take on this?
I think in general, like what we focus on is kind of always or usually dictated by the market itself, right? I think like in general, globally, there has been a significant trend, an upward trend in fintechs overall, due to probably like a couple of reasons. And I can't say we on purpose changed our focus to fintech. I would say like we're still quite sector agnostic. So any founder can basically convince us to any business model. But still, so out of our recent funds, which is under the 50 million euro funds, so out of our first 3 investments, like 2 happen to be fintech, but I think it has to do something with the market as well. And if you would ask me why fintech is like more popular than before, I think it's a global trend, as I told you, and like probably one of the underlying factors is that like very similar to other segments of software, I think the enablers are there. So what I mean by enablers are like there are more pay infrastructure companies. So basically, I think like as an industry in general, so financial industry has been lagging in adoption of all of these like software, and I think like for example in the context of CEE, for example, so founders coming out of this region, even if they're not in the US or UK, they can make use of such enablers, such infrastructure companies. Like for example, Marketa is a great example. So I think like evolution is basically enabling more companies to start in financial industry sector. And the second thing is like in general, fintech definition is I think kind of even becoming maybe more extensive, because like every startup that's working on software is kind of like any generalist software company can actually enter into fintech as well, because it's a very good example is like UiPath, for example. So like RPA is a very typical use case for very large banks, and automation for them is like they're using companies like UiPath, and it's changing the landscape in enterprise banking institutions, right? So I think in general, to summarize the fintech as a definition, so it has become more extensive. And since there are like more companies enabling like other founders to, or lowering the barriers to found more businesses in fintech, either in B2C or B2B, I think that has been the obvious effect. And more specifically to our region, I think like again, so remote work and COVID, I think it's even helping companies that has been started in our region even more than before. Obviously, short-term effects are sometimes not very visible, and sometimes like some companies are suffering because of the like short-term shock. But I think in general, so we might actually benefit from it.
Great. And just a follow-up question probably, because especially for you and Perry, because you have experience with the region for a long time. How would you compare the founders that you see that you meet today from Central Eastern Europe and for example 5-6 years ago? I mean, are they more prepared? Are they wiser, more mature? Do you still make this differentiation that is you're coming from Western Europe or you're coming from Central Eastern Europe, or actually the founders from the region are at par with their peers from Western Europe or other more mature hubs. Maybe you, Mehmet, and then Perry.
Yeah, sure. Yeah. So maybe I can start. And yeah, I definitely think the CE now has a more mature startup ecosystem compared to like 5-10 years ago, and this is true for fintech as well. I think there is now an experienced like tech talent base that took meaningful roles in the first wave of startup successes, and that's probably the key. And we are seeing the early signals of it, right? And so I think like once very obvious factor is what happened in Baltics, right? So there has been a very good series of like $1 billion plus companies, and like similar things are happening with the iPads. So these people are like willing to pass on these experiences to the next wave of startups. So basically either they're founding or joining existing startups, or funding or mentoring them, which is probably the major blocking point for any CE startup. So I would say this also has raised awareness like for founders coming out of this region. So they're not just focusing on local adaptations of business models that have worked in the Western markets, but they're thinking globally or regionally, or like they're thinking like expanding to Europe or to the US or globally everywhere from day one. And what they have realized, which I always think was a major block anyway, so was like they now confidently can say that we're good at product. So because like most of the companies that we see in this region, so they have a very good technical talent base, and like at the result of this, a very good product. But what has been lacking from my perspective, like personal perspective, was the confidence. And now, like if you show like enough examples, I think that confidence is also coming back up. So overall, I would say it's a more mature market. But obviously, I can't say it's still not comparable to like London or the US. Maybe we shouldn't even expect that. But I think it's still a significant development.
Okay, but we're catching up fast.
Yeah.
And Perry, because you have this very unique look at Europe and the different regions, so how do you see the evolution of the founders here?
Yeah, I mean, like, look, Mehmet said it, but it is a standard sort of evolution of ecosystems that you see everywhere. I mean, often, you know, great founders emerge out of successful startups and they have their own ecosystems. And as he says, we've had some great successes and unicorns, and they spawn their own sort of more experienced entrepreneurs for them. So the entrepreneurs that are emerging are definitely, you know, there's a series coming and being backed by some of the founders of the successful ecosystem players, and you see that everywhere. I'd say the capital ecosystem, and it's interesting to see, you know, the breadth of the types of investors you've got on here is also, I mean, I remember being in, you know, at a conference, the Login conference in Lithuania, maybe 6 years ago, and there was sort of nobody there. It was a bit of a random motley set of people. Nowadays, you know, it's the same thing. You get attention from, you know, there's funds in the region who've increasingly got track records and are able to follow on. There's funds coming outside the region, you know, looking in and trying to find great investors because they've been successes. So yeah, I mean, it's sort of the same, and it happens everywhere. In fintech, the other thing that, you know, is different from some of these categories, as you'll know, is it's, as well as being sort of operationally complex and technically heavy, they're also relatively highly regulated. And you've had very, you know, we've had very benevolent regulators in the Baltics, particularly in Estonia and Lithuania. So, you know, they're big bases for a lot of these businesses. So, you know, whether it's Europeans wanting to base themselves in the region, sort of Western Europeans, or startups from the CE itself, yeah, I think there's been tremendous growth. I've seen some fantastic entrepreneurs. Having said that, the one thing I should say is I wouldn't want to overstate it. I mean, in a funny way, you've always had some great entrepreneurs. They just haven't necessarily been trying to build global businesses, or had, you know, either had the ambition or the access to building these sort of wider, bigger businesses. So I've seen great entrepreneurs over many years in CEE, but as Mehmet also says, there's tended to be a bit like often in emerging markets. I live in a different emerging market. What tends to happen is a fairly strong technical focus, but, you know, not necessarily so strong on sales and marketing. But increasingly, yeah, you've got some great people in the region. So no, it's definitely been changing.
Great. Yeah, I also think that the environment is changing, and there's much more capital. We recently had an internal chat that probably there are a few billions committed to the region through various funds. So definitely there is a lot of capital. And in that connection, I mean, going to the fundraising topic in much more detail, I mean, something that usually bothers or surprises founders, at least from our perspective, is the time for fundraising or for preparing seed or Series A round. So could all of you share, I mean, from your perspective, how much is the time today to close a round? I mean, from your perspective, for the companies that you look at, I mean, whether it increased because of the COVID or because of the interest that we have discussed is more into fintech, it's actually become faster for founders. Maybe Myrto, I'll start with you. I mean, how do you see it?
So I would definitely separate between seed and Series A. So for me, like the time for those two things is different in my experience. So for seed, I wouldn't say that the process should last more than a few weeks. So 6 to 8 weeks, maybe, especially if you're doing what I think is rational to do, which is kind of look at the local funds. You mentioned that there's now an availability of capital in the Southeast Europe region, and there is. So you should be looking at the first money just in terms of capital efficiency, time efficiency locally. So I think that shouldn't be taking very long. And of course, we discussed a little bit before kind of the global ambition that founders are increasingly having in the region, which we see as well. And that also has to do with, you know, how you choose your first investors and then where they can lead you as a next round. For the Series A side, I would say, especially if you're looking at onboarding kind of VCs that have not traditionally looked at the region, you should be looking at longer sales cycle, like longer funding cycles. And that's mainly because there's still, there's interest and there's also caution, I find, from both like European VCs in the hubs and American VCs on the region. So everyone's interested. So everyone's trying to understand why they miss the huge companies and, you know, why they miss them. And Mehmet, for example, didn't miss them. And also trying to see what this story, which I find is uniform across the region, of very, very strong technical founders, very strong product, very solid, robust solutions is about. But this takes time, and it takes time to kind of understand their circumstances. It takes time to even conclude the logistics of the deal, right? Like according to the company's based, etc. So I would say like the Series A should be taking a bit longer. There's seed money available in the region now, so this shouldn't be a long process for the founders that have very clear things that they're doing and obviously some traction already from their B2B or B2C.
Great, thanks. Max, what is the situation on your end?
We're investing in Series A, so I would agree to what Myrto said. Of course, it you should plan a little longer than what you see in seed investments. Typically, in Series A, you have. Can you hear me?
How longer? How longer?
Yeah. So what we typically aim at is 1.5 months to 2 months due diligence or phase from negotiating basic LOI, term sheet, drafting the whole documents, doing the due diligence, and really signing, closing, wiring money. So I think this is a process where there are a lot of steps to take typically.
Yeah.
Especially if a new lead investor comes in. And I think if you calculate with 2 months, then yeah, you know, on average, you should be fine. Maybe the others disagree, but this is what I would say. I mean, some variables, of course, are there. I mean, do you have, for example, already a very renowned seed investor in there? Yeah, that helps. Do you already have audited reports or not? that helps. Do you have a well-prepared data room? Do you have your finances well documented and prepared? Do you have a forecast that is based on some profound hypothesis that you can discuss? Everything got a bit more, I would say, formalized because of the virtual nature of how you now do due diligence. Typically, if you cross a certain step in a conversation with a VC would probably jump on a plane and come to you and see your office and see your team and speak to you, and also to define the strategy for the next 1-2 years at least, this breaks away a bit. This opportunity to actually meet, sit down, discuss things, and for that reason, I think it's even more important for companies to be very well prepared and structured. If everything that normally happens also in between just talking and being there needs to be somehow packaged in 2, 3, maybe 4 hours conference calls where you actually try to talk about your company, talk about the future of your company, talk about the cooperation that you want to have with the VC investor. So I think it's fair to say that you should, in these times, prepare enough of as a founder, of your time for a few months to actually the investment process, especially for the CEO, because it is a lot of work to raise a funding round, and there are a lot of steps to be taken. And of course, this virtual setting of due diligences make some steps even more important. I think the more it even is important that you are actually looking very closely at your own VC due diligence. So with whom do you want to work? Whose money do you want to have? I mean, here in this round, you have VCs who are very experienced in your region, who know a lot about your industry, but there are a lot of funds out there who are more or less spreading and praying, and it's always helpful in these unsecured times, in these times where actually it very much depends in which country you are, in which sub-segment of your industry you are active. As Perry said, and others, there were sub-segments who benefited. There were sub-segments of fintech that were massively hit. And if you don't have investors on board that very much understand what you are doing and in which region you are doing it, I think this could be a problem.
For me, it sounds like more than 2 months. I mean, what you have described. I mean, this all engagement and preparation. So that you should probably be.
If it's 2 months, you're fast. Yeah.
Very fast for a series. But I have a question, a follow-up question to you. Do you? I mean, it's for the founders, because there are a lot of founders in the audience. So the question is, do you publicly make this type of readiness list, so to say, for your fund, or it's more in a private discussion when you actually disclose what you like to see from the founders, so that they're ready to start discussion with you guys?
Yeah, of course. I mean, we have on our website, you'll find which areas are interesting and which stage we're looking at. But I think in a first call, it typically very soon gets obvious if there is a general fit between the fund and the startup and what we are looking and what the startup is looking for. So if we say that we want to have a first product proof and strong traction in one market and the potential to scale internationally in our region, then those would be terms that I would in general put out there.
Right, right. Okay, thank you. And Mehmet, I mean, what is the best time for founders to engage with you? I mean, how much time they should provide for chat with you? I know that you are very fast. I mean, I've seen it firsthand.
Thank you. So like a process for us could go for 1 month or 2 months. And I think if I were a founder, so what would I look for is to the negotiations and meeting with other VCs. So that's the important part. And all the due diligence or legal stuff that you can't really predict. Over more than 100 rounds that I was involved with, this was my experience, because there can always be some unexpected stuff. You can switch companies, flip companies, and this is not really important. And that's why I think we advise our portfolio companies or any startups to start fundraising before when you have 9 to 12 months of runway. So you need to start thinking about fundraising, and you have to strategize. And fundraising is not obviously we invest in companies that we meet on the spot. So that has happened quite a lot of times, but the landscape has changed since. And what I have been realizing also during COVID times, since you can't really meet face to face, and if you are aiming to work with a multi-regional VC or a VC from the US or UK or Germany, so you have to spend more time and you have to gain confidence, right? And it's not one way, it's two way. So that's why a good written communication, a good written investor update, and even if you think you are early for a certain VC fund, try to reach out. I think I am quite open to that, and all of our team members are quite open to that. I know fellow VCs are quite open to spend some time with the seed investments as well. So we are typically an early stage investor, so we minimum we put 2 to 5 million euro in an investment, but we do make exceptions. So we are quite flexible. So in our first fund, we wrote a 300,000 ticket into an idea stage company, for example. So these exceptions can happen, but what's important is not just with us, but with everyone. You have to develop your relationship, right? And on the other hand, we touched on this, how much does it take to raise a round? There's a fine balance there, because in overly competitive markets like today, although we don't see it maybe in our region, but in the US, you see some rounds are oversubscribed over 2 weeks. I also don't find it too healthy, to be honest, because selecting a VC partner or selecting an investor, especially if they are becoming your board member, you also have to understand and assess them, right? So because they are maybe gonna be together with you for maybe 10 years. So, and a bad chemistry or something going bad can really mess up with anything. So this is kind of especially first time founders really underestimate this, and they really focus too much on fundraising too quickly. But there's a fine balance. Obviously, I don't mean to say the fundraising should take 6 months. Obviously, it's no brainer. So the founder shouldn't spend too much time on fundraising. It's distracting. I know that. But on the other hand, you're selecting a partner for the long term, right? And deciding for your partner in a couple of weeks, it shouldn't be easy for the entrepreneurs as well.
Yeah, perfect. And Barry, from your perspective, we all repeat the mantra that seed rounds should be raised locally, and then Series A should try to go to different places, not only from the funds that you have here. From the London perspective, today, how would a company, what does it mean to be Series A ready, for example, for a fintech? How would you define it?
So generally VCs are pretty lazy people, and they tend to do kind of 80% of the stuff close to home. And what happens is the earlier stage businesses are, the more help and support and general time they need. And so although VCs may tell you that they're going to kind of fly in and do other stuff, it is true that they do sort of 80-90% of the stuff within 500 yards of their house, because they have, VCs, you've got to remember, are dealing with multiple risks, and they don't sort of need the added dimension of sort of geographic risk or whatever else on top of execution risk or funding risk or whatever else. So I guess the job typically in the past, and it's true now as well, is to kind of look and smell and feel local to the people whose money you want. So, if you're wanting to raise from UK VC, sure, the big funds will fly over and send their associates or analysts and tell you they love it. But the reality is that, you kind of need to have a headquarters in London and be sort of UK based, and your accounts in the UK, and, because as I say, otherwise it just introduces additional risk. So you do have a trade-off initially. Nobody minds what market you operate in, but where the center of gravity is in the business is generally, you need to be close to your investors. So, generally speaking, venture funds, as I say, sort of the earlier stage it is, the closer to home they tend to invest. And so, yes, you're better raising seed money and angel money locally, and you're better, looking for B and C from sort of international investors. I feel like I've totally forgotten the rest of your question.
I mean, for Series A, what's today
Series A,
in London?
listen, so the other thing is VCs are also a funny group, and I've been one for many years, in that, they'll all tell you their criteria, and, it needs this and it needs that. And it's just like the job and the house and the girl and whatever else. It's like when you see one that you're in love with, because either it's sort of growing at a great rate, or the founder's exceptionally strong, or they're in a big space, they're going to jump all over it. So, the truth is, there's no single benchmark. The danger, in a funny way, is for founders, if you're building your business, is, venture is a certain type of capital. It's a kind of high risk capital up at the casino end of the risk reward spectrum. And what happens is, if your business doesn't have sort of funding type market fit, if venture investors are looking for big and fast, they're not looking for big and slow, they're not looking for small and fast. I can't remember all the other variables of that matrix, but if your business is not on a growth trajectory that fits the capital type, it may be the wrong type of capital for you, because equally venture needs to take a sort of small risk of something large happening. So I guess the point is, Series A is generally if you've kind of got proven product market fit to a large extent, and then you're trying to raise capital to kind of grow and accelerate growth. And what the benchmark of that is, revenue run rate wise, it's really about momentum more than it's about some actual figure. You know what I mean? It's like what tends to happen as a startup, founders will find this, and founders often fall short in this way, is sort of they'll turn up at a VC, and a VC will say, oh, I'd love to talk to you when you're here. When you're there, and they come back and they say, I'm now here. And then the VC's both forgotten that, and that wasn't really the metric that they were talking about. It's really the journey that you take them on as you engage with them, more than the point in time you talk to them. So the point is, if the train's leaving the station and we're growing like crazy and we're holding the doors on, you would know if it's a good time to invest. And if you're sitting there and, I need your money to be able to prove X, Y, and Z, it's much harder to persuade venture investors that's a sensible thing to do.
Right. So a major message to, it seems to everybody, is engage with your investors or future investors as early as possible, and keep them engaged. This is probably the best recipe. So going back to the fundraising, and something that Max mentioned in the beginning, that one of the best ways for due diligence is if the founders are actually, the companies actually already engaged in a pilot with Raiffeisen Bank International. I would like to ask you, how do you see the cooperation between corporates, especially banks, and the fintechs? Because sometimes the fintechs are either stealing or disrupting certain parts of the business of the banks. So it's a very fine balance of this cooperation. So How do you see this evolving, and how people could fit this in their fundraising strategies? I mean, when it really helps to have more engagement with banks, does it make more sense for the VCs, or it's a more dangerous play? Myrto, how do you see it from the perspective of Greece, for example?
Yeah, well, so my experience, I think it's interesting because, like, I think there are different views even between this panel. So my experience with banks here is that they're mainly traditional. When they're looking at innovation, it's usually around a very closed sandbox. So you discuss pilots. I think for us, what's important to see when fintechs are cooperating with corporates, and that's actually wider, is where does the pilot lead? So what are we trying to measure? What are we trying to prove? And what exactly is the next step? And also kind of trying to work out the workflow. So who in the bank needs to approach with even like basic things? Does the solution need to be on-prem? What does the regulator say? These are all questions that will determine whether there can be a cooperation between traditional institution and a fintech. And in our experience is that it is difficult, because kind of like shooting your own leg in a way for banks. And then it's also difficult because the processes are there and the actual kind of understanding about what disruption this could bring to your own business and make it beneficial from the beginning is not there. So we are skeptical. And what we're also seeing is that a lot of fintechs that we see are starting off with the assumption that the banks are going to be one of our first clients. And then exactly because those reasons, kind of like long cycles, a lot of difficulties in implementation, etc., they're switching to corporates. So, if you have like a cardless payment acceptance solution or whatever, it's probably easier to go and address the solution to a business that will immediately benefit from that, be it on the increased profitability side or on the lower cost side, and can implement fast and also without asking anyone's permission in the process and dealing with like internal balances and what have you. So my gut feeling is that it will be hard for any large institution and especially banks like the Greek banks and the regional banks are also very traditional and old school, etc., to innovate with cooperation. Everyone's trying, but I haven't seen it done extremely successfully yet. What I do think will happen, and maybe that's kind of a trend in the future, is sort of this consolidation, because I think the traditional banks will be losing market shares and customers, especially with the generation shift. So I think that's when you will see like the buyouts and the exit. But I think that the intermediate part is going to be difficult practically.
Right, and I've been following this interesting case, and I suppose most of you here today, the case with Wirecard, and the discussion that there should be more regulation coming. So, do you think that? Mehmet, do you think that regulation could actually changes in regulation would actually try to tame some of these fast or accelerated innovation in the sector?
So it's hard to answer. So I guess we'll see the result. But like my comment would be to like I don't see regulation as an evil thing. Like the most Americans do that way. But I think like in some ways, for example, like opening up APIs or like forcing banks to like open up things, I think the regulation was useful and it will be useful. And the case of Wirecard, for example, so it has resulted in a serious trust problems, both in public and like also the partners of Wirecard in like throughout the region, right? So it shouldn't happen again. And I think like when it comes to especially payments, so it is like trust is probably the most important factor. So that's why I'm kind of leaning towards like having more regulation would be even probably better for the ecosystem. Obviously, like with everything, like with startups, right? Like you see a founder like pitching an idea to you, but what matters is the execution. So like regulations are usually like intended well, but they're not executed well. So what happens is we need to be careful about the execution anyways. But I think like when it comes to like banking landscape, some of my the participants in this call has mentioned this, but I think like for a fintech, for example, you can't really ignore the existence of traditional banks, right? I think like even like there's now a very successful cohort of like neobanks, but we are like with COVID and like with this stress test, we're kind of coming to a realization and like also realizing that like traditional banks are strong and you have to collaborate with them. So in that sense, I think if you want traditional banks to act on certain things, probably the best way to do it is to also use regulations. So because that like they are so used to this regulatory environment, so basically you keep like they're so used to being dictated. So I think in that sense, I think I overall see that as a positive.
Right. I see that we thank you very much. I see that we are advancing with the time, so I would love to give some opportunity for questions from the audience. So I would ask Gergana to send me any questions that are coming from the audience. Please send them in the chat to Gergana or to me directly. There is one question which is interesting. It's not related entirely to the fundraising process, but it's are VC firms currently hiring people, or are hiring efforts minimized due to the corona? I mean, personally, we have increased our team here during this period, but it's interesting to hear you guys. I know that hiring in VCs is not a very ongoing process. It's but anything on that? Myrto, Max, did you increase your team?
So like I'll talk about our example, but it's very specific to us. So we're a small team, or just 6 people. So we are always hiring is the answer. So if we find someone who's extremely talented who can join our team, we would love to have them on board. And I think we'll figure out exactly how to take best use of him or her. So it's a lonely job in many ways, especially at the very early stage side, because you don't have data. A lot of it has to do with your experience and kind of like how you assess the technology and execution risk, which is obviously the biggest risk, and how you assess people. So if we find people who are good at those things at some sort of level, we would love them to join us. So we're always looking. Like, I think in my mind, every conversation I'm having with anyone is kind of like, would he or she be a good fit to join with these teams? So I always have that. It's very personal, person-centric business. So yeah, if you find good people, like, our policy is just to take them on board.
All right, thank you, Max.
Yeah, we've been actually hiring over the last months, and what I find very interesting in hiring for VC, because I've been hiring for the bank previously, and now I'm hiring for VC. Is that actually there are a lot of very strong venture capital investors who come from different angles. You know, you can be with a technical background, you can be a fantastic VC, you can be an ex-founder, you can come from investment management or M&A, or you name it, yeah, or from a corporate. As Myrto said, there are a lot of different skills necessary to be a good VC. It's not only numbers crunching. It's not only forecasting of market. It's a combination. It's not only negotiation skills. We've had fantastic applicants also from Central and Eastern Europe. A lot of really interesting people to talk about. and we've hired two new hires in our team, amazing people from Ukraine and from Hungary. And only maybe let me say one thing. It was I would really encourage to have more female candidates actually in our applicants. It was actually very hard or very hard. There were just very few of them. So I think this is something that the whole industry needs to work on to be somehow exciting also for females. And the rest, I would say, it's very exciting to hire for a VC because, as I said, there are just so many different ways how you can be a very good VC.
Right. Thank you very much. Since the time is advancing, so I would like to end up with some very, very practical tips from each one of you for the founders on fundraising, something that is on your top list of tips, and also to share with the founders how they could approach you, how they could engage with you in their fundraising. So let's start with Perry.
Oh, sorry, I was on mute.
Yeah.
We have a website. We're sort of, I think it's pitch at Augmentum VC, where we tend to take kind of general leads from people. I think it's
right.
the email. I mean, generally speaking, what this is a bunch of entrepreneurs and they're sort of looking for stuff on fundraising. I mean, generally the key thing here is to use your networks and build networks of people. Most of the qualified leads, as you'll all know, come to firms, don't come cold. They come from, other referrals or people you know. So you're really best off kind of working your own contacts or your investors in some ways as much as you are reaching out. I mean, like I say, we definitely actively look at the pipeline that comes in directly. But yeah, you want to use your network.
Great. Thank you very much, Mehmet.
Yeah, very similarly. So coming through network is probably the #1 choice, but it's not necessary. It's not must have. So I personally quite open to LinkedIn messages and LinkedIn reach out. So normally people don't like it. It's spammy, but it's okay. So I usually look at them. And my personal email is my last name at earlybird.com. So ATICI@earlybird.com. So feel free to reach out. And you can also reach out to us through our website at earlybird.com. So it's fairly easy, and you can also reach out if you happen to know someone in common. So you can also reach out through them. But we're quite effective and quite responsive to our emails, so we try to be. So each of these channels should work.
Perfect. And in terms of tips, any tips for fundraising for founders? Something that's on a top list?
Yeah, sure. So I think it's going to be very basic stuff, because I believe in doing the basics is the most important thing, right? So don't miss out clearly communicating what you do and your value proposition, because in many cases, because being buried in your own business, sometimes you can't really summarize things. I think that's very key. And you have to give a sense of at what stage you are, right? In terms of pitching to others, because some things can be quite good to summarize in written communication. So why not utilize it? I think we're in an age with abundance of information. So and in a clear, especially during COVID times, investing in clear writing and clear communication is probably the best thing you can do, not just for fundraising, probably also managing your business as well. But I think this is maybe one of the common problems that we see, especially in reach outs. So I would highlight that.
Right. Thank you very much. And Myrto, what are your tips for the founders and how they could engage with you?
So yeah, we're pretty open. So I think the best way is to go to our website and press submit, and then answer a very simple type form with the information of your company, and then we go through regular circles of kind of reviewing companies, you can also contact me directly. I think I was thinking as Mehmet and Perry answered, and I think the one thing I'm missing from early stage Fintechs, I think everyone has done their homework by now, so they have a fairly good structure and they know where they're going. But I am missing, I always ask the question, like, when you run out of money, what does your company look like? So you're raising a pre-seed or a seed round. And, people are good at saying what's long-term vision, then how I get from A to B. But I want to also know, like, before you go out to the markets with another value proposition to raise your Series A or your seed or late seed or whatever, what does it look like? How many people are there? What are the revenues? What are your costs? What are the assumptions? How many clients? How spread out? What are the geographies? So this is the question I'm not seeing in decks as much as I would like, or in the first contact, and I would like to see more of it. It's always something we want to answer internally.
Great advice. And Max?
Yeah, I think similarly, we are also very easy to reach. I mean, there's a homepage, you can press contact, and then you're directly in contact with us. You can reach me over LinkedIn. There is actually, I have the feeling most people don't know, but there is a text box when you actually try to connect with people. I have so many just requests for connecting where I have no clue who it is, what it's about. And I just urge everyone, just one sentence about, hey, why are you pressing on connect makes magic, and increases the probability that I accept it by, I would say, 150%. This, I mean, a lot has been said. Maybe for a CVC, thinking about how our money can be smart money for you. How can a win-win situation be created between a bank and the fintech? Not only pitching for the money, but how the cooperation can look like long term. This might be an add-on if you reach out to us, which is very valuable.
Great, and I suppose that the startups shouldn't be a client of Raiffeisen Bank. I'm kidding.
I mean, I can only recommend it to be a client if you wish to have the best service, but it's not necessary.
Perfect. So thank you very much. It was a very exciting chat. So really great insights. So what I understood from you guys, and I'm very happy that you confirm some of our conviction internally, is that there are money available for startups in the region. Fintech is on the rise because of a number of trends going on, and the founders seem to be much wiser and much more prepared than before, which is great. So probably the something that we always encourage founders and everybody here confirming is that it's great to engage as early as possible and as well prepared as possible. So it's best if you could start earlier. As you see, VCs are pretty open and pretty friendly to founders, and I know the four persons on the panel are very professional, and they spend a lot of time talking and helping founders prepare for the respective fundraising activities. So good luck to all the founders, and once again thank you very much to our panelists. We really appreciate you joining us today, and expect soon our next episode of Beyond Fintech. So thank you very much, guys. All the best.
Thank you very much.
Bye.